My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I do make friends. I'm just trying to make a little money. My job, not just to entertain, but to educate, to teach you about this business. So call me 1-800-743-CNBC. Tweet me at Jim Cramer. Maybe we have it all wrong. Maybe we've got the consumer all mixed up. We keep talking about how the consumer's overstretched, strapped, sapped. But what if the consumer's just fed up with paying higher prices for so many things for so long and has grown frugal and will eagerly jump at a bargain, but has no time for those who have not reined in their prices, even as COVID's been beaten? The new frugality is the mindset, and you and I, can profit from this incredibly powerful, but I think hitherto unrecognized trend until tonight. See, that's my conclusion after a day where the Dow inched up 16 points, S&P advanced 0.16%, NASDAQ gained 0.49%. NASDAQ's got some pretty good mega caps, of course. Now, I know this new frugality thesis isn't obvious, but you know why that is? It's because we keep getting thrown off the scent. Take yesterday. We learned that the CFO of Walmart, John David Rainey, total straight shooter, gave a talk where he said it'd be difficult for his company to beat its excellent first quarter. That was taken by Wall Street as what's known as a guide down. A bummer of a forecast, and Wall Street stock, Walmart stock, it got hammered. But if you do a simple ChatGPT query about what Rainey really said versus what he said on the last conference call, you'll find that he used almost the exact same quote. Basically, that whole talk was a non-event yesterday. So if you saw Walmart yesterday off the glib analysis that Walmart's having a suboptimal quarter, then you got it wrong. Walmart's everyday low price model and their rollback in prices for thousands of goods has made their merchandise incredibly appealing to the newly frugal consumer. Business remains incredibly strong, and the stores have never looked better. A lot that Wall Street ever goes to one of their stores. I'd like to invite them. They would really enjoy it. Now, that's the same reason why Costco is such a strong stock. It's amazing how they're pressuring suppliers to roll back prices. And every time I look, it feels like there's a new Kirkland signature brand, their house brand, that has more volume and a lower price and is in better, I got to tell you, is in better shape than any of the big brand names. I love their product. I always feel that Costco is in my corner. It's in my corner. Versus the greedy suppliers that want their prices back. They won't lower their prices. They won't lower prices to where they should have been. And they solved all the supply chain issues, right? They solved the transporters. They solved the raw cost inflation. But other than Costco, who's in my corner? I mentioned TJX last night as an all-price retailer, right, that's been getting the pick of the apparel litter because the full-priced outfits are basically just flat-out losers. They don't fit the profile of the newly frugal consumer and where she wants to shop. TJX, though, does. I highlighted this last time with that piece on Ollie's, the ultimate in closeout retailers, by the way. Matt Boss from JP Morgan, best retail analyst in America, he's noticed that Big Lots, another not-so-hot retailer, is on the ropes. If Big Lots were to liquidate, there'd be almost 1,400 locations for Ollie's to potentially pick and choose from to expand dramatically, increasing its footprint. Now, not to mention all the cheap closeout merchandise they can pick up for next to nothing. That would cause the stock of Ollie's to soar, and why not? It should. New frugality. The other two off-price plays, Ross Stores and Burlington Stores, are both performing at a high level. We know apparel inflation has been sticky in the Consumer Price Index, but these four off-price chains are cutting the price of apparel aggressively. New frugality. Again, though, we keep getting thrown off of my thesis by smoke screens. You might think, wait a second, the consumer's clearly getting blasted because of all the dollar store stocks. They're getting crushed, right? Aren't they the last bastion of frugality? No, that would be wrong. They're not. I think people have realized that dollar stores have become relatively expensive places to buy goods. They raised their prices very aggressively during COVID. Even calling them dollar stores is a misnomer now. They definitely don't have the lowest prices. That's Walmart. That's Costco. The younger consumer, not the ones my age or even the 20 years younger ones, the ones who are in their 20s and 30s and live with this, they know how to measure what's going on. They measure price versus volume all the time. They can comparison shop much better than Sam Walton could because they've got constant internet access their whole lives. They won't let the dollar stores get away with their most latest round of inflation. They want prices lower. So the dollar store business declines don't spoil my new frugality thesis, because if you actually care about finding bargains, you don't want to shop there. On the other hand, look at the success of Temu and Shein, those two Chinese companies. You go on, well, Asian companies. You go online, you see their prices, and I have to tell you, they seem like mistakes. Because how could anything be so cheap? But no, the prices are actually real. The mistake is not taking advantage of them. Although sometimes taste may come into play, at least periodically. And as says someone who bought a lot of stuff from Temu for my wife, only to see it in the blue recyclable trash can the next day. Ouch. Now, when I said my feelings were hurt, she said, why? She threw it in the right bin. Let me give you another example, a little less anecdotal. Carnival reported tremendous numbers yesterday. You know, you might think there's nothing frugal about taking a cruise, but what could be more discretionary than going on a cruise? That would be wrong. If you want to take a vacation, some of these cruise options are insanely cheap. Carnival's inside rooms range from $150 to $245 a night. Royal Caribbean, $175. Norwegian's $245. These prices are phenomenal. I mean, kind of ridiculously low when you compare it to hotel rooms and airfares. Right, by far the most value-conscious way to take a vacation. That's the new frugality. Yesterday, we talked about the horrendous sales of Pool Corp, which sells all sorts of swimming pool-related goods. I thought the problem initially was consumer pushback. It's true that with rates too high, maybe more expensive to take out a home equity loan to build a pool. But I won't dig you on this one. You know what I came up with? An alternative theory. The cost of labor, which has not yet come in. It's a big issue. Paying someone to fix up your home is borderline extortion right now because the contractors hold all the cards. It's simply become too expensive for most homeowners to afford. You need to see these costs come down before you see more pools being built. The cost of labor is too high for many homeowners. We've seen new boat sales plunging, too. Now, some of that's because they're pricey. But again, the frugal consumer's cagey and clever and using the web constantly get a better deal. Guess what they found? They actually love boating more than ever, but they know it's too expensive to buy a boat. So what do? Brunswick bought Freedom Boat Club, a rental service. You don't have to keep up with maintenance or docking fees or financing costs. You just borrow the boat and return it when you're done. The value-conscious way to go boating. I am sure people, yes, indeed, who they rent it and they say, oh, I ought to have one. But I'm telling you, the renting society is beating the owning society. You wonder why the sales at CVS and Walgreens report tomorrow have been so weak? It's simple. I don't know who sold thinks that those stores are bargains. In the past, the drugstores were time savers. You could always drop in, get what you want, get out in 2 minutes. But the frugal consumer just doesn't spend money at these places now that everything's locked up behind plastic. Amazon tends to sell almost everything you can get from a CVS or Walgreens, and they usually deliver it the next day or even the same day in many parts of this country, and at a lower price. Order in the morning, you get back home, it's right there on your porch. It's waiting for you. Again, this younger class of consumers knows pricing better than any other retailer, and that usually puts Amazon ahead of the game. Let's not forget restaurants. Today, we got the flyers from McDonald's. I don't know if you're a loyal member, you might have seen it. They got a $5 meal going. They finally had to bring it back after raising prices endlessly. But I don't know if Mickey D's can get traction, and not just because of the small fries. Texas Roadhouse and Brinker are offering $11 dinners, much more food. They got great liquor options. They're so cheap that their sales are booming. Brinker, which is owner of Chili's, has leveraged the newly frugal consumer to the hilt and played it up on social media, and that's why that stock's been the best in the group. So let's suspend the notion that the consumer's totally strapped for cash. That's wrong. The bottom line is the consumer's finally pushing back and demanding better prices. We're no longer willing to be cowed into paying more than what something seems to be worth, which bodes very poorly for those stores that have yet to roll back their prices, but very well for the ones I've mentioned. Bottom line, the consumer's no mood to pay more for less. You just can't let the distraction of the false characterization throw you off the scent. If you offer the consumer a real bargain, not a dollar store one, that consumer is going to take it. Ryan in Michigan. Ryan.
Hi, Jim. Third time caller. Thank you for all your input.
Third time. I love that. We had a third timer last night. He turned out that he had the steak and he loved it and gave us a nice note. What's going
on? Thinking about I bought AT&T about a year ago at the low, and it's rallied nicely this year and has recently hit a 52-week high. Thinking to keep that, add some more. Verizon, T-Mobile, I like the yield on Verizon.
Okay, look, AT&T's come back at 52-week high, but, you know, that's kind of from a low level. T-Mobile's got growth. I like growth. I am a big believer in growth. I want to go with T-Mobile. Now, look, we need to stop with the notion that the consumer is strapped for cash. Instead, accept that the consumer is fed up with paying unfair prices that were jacked up during COVID and needs to come down now. If they're offered a bargain, they will gladly take it. Maybe the guys who are extortionate should realize that Costco and Walmart are winners. On Man Money tonight, Levi's is falling after earnings. I'll go straight to the source. Let's find out what's really going on here before we just dump the stock, please. And speaking of apparel, a winner's emerged in the space that we haven't focused on. And I'll reveal what it is and why I think it can keep running and why it's got the wrong name. And it isn't RH. And Paychex has a solid read on the state of medium and small businesses. And with investors concerned about economic growth, I'm getting a sense of where we stand with the CEO, really. So stay with the newly frugal Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.